Well, good day, Lou. How are you? Good to see you today. And replacing our fearless leader, I suppose we could say, who's a little under the weather. But we've got a lot to talk about.
He's out for a few weeks, so we're going to do it for the next few weeks. So we'll get it all done. And I suppose, first of all, I'd like to really introduce you and welcome you along. I mean, when I look at everything that you've done and all your qualifications, I feel, I suppose, not up to that level, mate.
No, all good, Lou. It's I think we're all in the hands of the unknown at the moment. We had, of course,
we are a bit, aren't we?
We had a big decision from the Reserve Bank this week with its April interest rate position now revealed. And for me, It was a bit of a surprise, but I'm just looking at, I guess, the theoretical side of economics. But the fact is that the Reserve Bank have decided to leave rates on hold. Yes, believe it or not, on hold after 10 consecutive months of increases. Yeah, starting in May last year, of course, and that May increase last year was the first increase in interest rates we'd had in over 10 years. So we had none for 10 years, and then we had 10 months in a row. And now we've had a pause. And really it's a little surprising if we look at the data that's been coming out, Lou. In my opinion, it really doesn't support a pause at all. In fact, the main game is supposed to be to raise rates to reduce demand and therefore put downward pressure on inflation, which, of course, and as the Reserve Bank concedes, is still too high, way too high. But the Reserve Bank has decided it wants to see, take some time to see what effect that higher interest rates have had on inflation. And it's because it believes that, we may not be seeing the effects yet of these rates. And I think it wants to make sure that it hasn't gone too hard, and that will cause some sort of a downturn, which would be difficult to control. Now, I'm not sure what data. In fact, I don't think there's any data to support the proposition that interest rates have affected inflation. The only data that we've had out that the Reserve Bank over the past month that Reserve Bank refers to is the monthly inflation data, which, of course, is a new data set from the ABS. And even the Reserve Bank themselves have propositioned that this data set is experimental and that it needs, some work on it before it becomes a reliable indicator of inflation. So, and yet it's used it as a point to saying that, the monthly inflation data is better, therefore it may be, showing that higher interest rates have worked. I'm not buying that, to be quite honest. And the other factors that we've had over the past month clearly reflect a very, very strong economy continuing. Of course, we have the lowest unemployment rate for a month on record, back to record low unemployment levels over February. We had the number of people in work increasing. Over 60,000 jobs were created. The number of unemployed fell, and the proportion of the workforce from the population increased. So we actually dragged more people out of the population into the workforce at still a near record level. So it really doesn't get any better than that, Lou. A very, very strong economy, and yet we've had a pause in interest rates. So, does this mean that
we do relook at everything again?
Well, this is the problem.
I suppose the interesting, quite an interesting couple of statements have been made.
But having said, the issues are what model the Reserve Bank is using to justify its monetary policy stance. And it has said that it looks at the labour market, obviously inflation data, and retail sales. And retail sales were stronger again over February, probably not tracking as high as they were, or the trend is not as high as it was towards the end of last year. But still, it's, well above where it was pre-COVID and rising. So, I think it's early for them to be surmising that there's been an impact on the economy in terms of reducing demand and spending because of higher interest rates, and that they want to sort of wait and see. And the other point, Lou, is that we haven't had none of the other central banks are signalling that they're going to pause rates either. It's in fact, the US have just put up their official rates. So they're really bucking the trend in terms of the international experience from higher rates. So, it's, I guess, a leap of faith from the RBA at this stage. And I just hope it doesn't mean that, we're going to have higher rates for longer because, we really haven't done anything to control inflation.
I suppose it's quite interesting, Doctor. Some of the comments that I've had from clients, and I still sit with quite a lot of clients, they said, it was probably political pressure that they've not done this increase, or, it's been the fact of the population and, some of the bad news that they've had, but it actually is, And quite often we'd probably be saying maybe we should have had a little slight increase.
Well, I think this is the issue now is that when you can't justify, or when the Reserve Bank's having difficulty justifying, its decision making based on the parameters that it's promoted, then there are questions about, well, what exactly is going on here? What's driving these decisions? There's in their last meeting they discussed for the March interest rate decision. They did promote the fact that, perhaps they would consider pausing rates. Now, the data to then, to March, the beginning of March, was looking like maybe there were some slight signs that, higher interest rates were working. But since then, the data actually improved in terms of a strengthening economy and higher retail sales. And yet they still went ahead and paused rates. So it leaves you to sort of think, well, they seem to have made that decision a month ago that they were going to pause rates over April. So, again, as you suggested, it maybe, then opens a can of worms in terms of what's motivating the Reserve Bank. If they're not following, their own guidelines, and that is that, they're going to raise rates until demand starts to soften, and then they pause rates when demand is actually increasing, it leaves a lot of question marks out there. But look, we can discuss the, issues in terms of, the macroeconomic theory here and, just what the hell is the Reserve Bank doing and why. But at the end of the day, this is actually good news, Lou, that we've, after 10 months of increases and a wide expectation from just about everybody
Give us
that we were going to get another one, we've actually had we get a pause. And this is in the context, which is quite remarkable again, and surely the Reserve Bank would be aware of this, that house prices are rising again. And it's not just a blip. My housing market has now reported consecutive increases in monthly house prices in the national the national house price. Similarly for units, and we've seen Sydney rising by 2 months now, nearly over 2 months, and nearly 2% higher this year so far for house prices in Sydney. And the Melbourne market also increased over February. Okay, Lou, so let's have a look at the slides for this week. And as we've already discussed, the big news is the extraordinary decision by the Reserve Bank to hold rates over April after those 10 months of increases. Inflation's still high. The economy continues to boom. Record low jobless, we mentioned that. Strong and rising retail sales, and house prices are rising again. And there's our trend for official interest rates, holding now at 3.6% after that 10 months of increases. Still well below, Lou, where we were at the peak back in 2011 there at 4.75%. So, of course, that interest rate pause will bolster already reviving housing markets, adding to growing buyer and seller confidence as those value opportunities emerge, with prices still lower than a year ago, Lou. And, of course, once we've seen prices now on the move upwards, buyers will start to think, maybe I've missed the bottom of the market. Maybe now it is at time to, if I've been putting off a decision to buy, to get into the market, because prices are still lower than where they were a year ago. So those value opportunities are emerging in the mindset of buyers, the fear of missing out energy. And we saw a similar thing happen in 2019 when when market confidence had been fragile for a while, and buyers started to move in because they perceived that it was a good time to buy. And I think that now with interest rates pausing, that'll even add more fuel to that particular energy, Lou. So, and that's the data on house prices, national house price up for the second consecutive month over March. And we can see all the major capitals reported increases in house prices over March, and Sydney was the top performer there, up by 1.2%. Same deal we had the same results for units, so it wasn't just houses, it was units as well.
Yeah, I suppose, Doc, a day doesn't go past where I'll sit with a client and they'll tell me that, no, units never go up as much as houses. It's always the houses. But your data's very different.
Well, that's true, Lou, and we have seen a movement in unit demand over the last 12 months particularly. In fact, units outperformed houses through 2022. And some of the smaller states, well, not so small in Brisbane or capitals, with Brisbane being a clear leader last year with Adelaide in terms of prices growth for units. So units are certainly popular at the moment, and continuing to create higher prices. Now, we also had some important data out this week, Lou, which was the home building data, the ABS building approvals data. Interestingly, we saw a bit of an uptick in approvals overall, up by 4% over February. This is seasonally adjusted data overall, and that was driven by houses that increased by 11.3%. But units were down again, down by 9.5%. But overall, despite that increase over February, total approvals are 31.1% lower than February 22. So again, just reinforcing that chronic undersupply of housing that we have in Australia. And, this is part of what's driving at the moment, clearly higher rents, and will continue to put upward pressure on prices as well. So, and there we can see the trend downwards in total building approvals for dwellings, even though we had that little uptick over February from houses. The trend is down clearly since the surge we got from Home Builder in 2021. That was the policy from the previous government to stimulate demand for housing, and it certainly worked. But now we're back to the I guess more of the normal result, which is falling building approvals, which isn't really a good environment since we're getting a surge in migration now, and falling supply and rising demand can only mean higher rents and higher prices, Lou, and we certainly know that in the rental market at the moment. And you can see there both units and houses are tracking downwards in terms of the trend for the underlying trends there for building approvals. And that's the data over the month. You can see that still everywhere down except for houses, which had a pickup over February, but coming clearly still from a low base. This is the long-term trend. You can see that really we've stopped building since 2016, notwithstanding that slight uptick that we had during that home builder period. And you can see there that clearly units have been the big losers in terms of decline, the trend decline in building approval since 2016. And I guess that comes back to, what we were discussing, Lou, about the popularity of units. Well, we've just run out of units, really. And, that shows there in terms of the collapse in building for units. And, even though houses picked up through that home builder period, they're now falling again, the underlying trend. And of course, the real problem is, and we'll look at this next week, Lou, will be building costs. And building costs continue to be high. They've, obviously put a lot of building companies under pressure, and some building companies, unfortunately, having hit the wall because they can't afford to finish their jobs because building costs have skyrocketed. So that means even these approvals, Lou, may not end up as actual jobs because they'll be either postponed or cancelled because businesses will be unable to, building companies will be unable to fulfill their contracts. And, of course, you can't trade if you're, insolvent. And that's what we're seeing in a couple of companies now, which is quite a concern. But from our point of view, Lou, it means that, there's just be even fewer homes coming into a marketplace, which is just chronically undersupplied. We really need more. Interestingly enough, when we look at the breakdown of the capital cities, Lou, we could see there that Melbourne is clearly the leader in terms of overall building. But now we've got Brisbane taking over from Sydney, and Brisbane is now building more houses than Sydney, which, is probably more about just Sydney's not building anything at the moment in relative terms, and Brisbane's, picking up. So it's quite remarkable to see there that, Brisbane is now approving more dwellings, but also approving more units in Brisbane than Sydney, which is typically the home of unit development, which is just quite extraordinary. You can see how really Melbourne is flying in terms of unit development as well. But overall, even when we look at these comparative numbers, they're well below, their long-term trends. But look, I think, again, this is reinforcing the issues with the Sydney housing market having run out of properties, and not really replacing anything at the moment. And finally, of course, we have the results from the weekend auction market last weekend. Of course, last weekend was the first weekend in April. Interesting weekend, Lou, because it is the typical Super Saturday, pre-Easter holiday Super Saturday of auctions. We always get a big number of auctions prior to the Easter break. Of course, agents are trying to avoid a clash with the Easter holidays, so we get some big numbers. So auction markets have been certainly travelling quite well this year, particularly Melbourne and Sydney, which are well above where they finished last year. And there's some real consistency now about that, about those auction markets, particularly Melbourne and Sydney. Again, it'll be welcome news from buyers that interest rates won't rise this month, and in what is already a vibrant auction market. And but that was tested. The market was tested on the weekend. As I said, that was the Super Saturday of auctions, the pre-Easter Super Saturday. And we saw clearance rates above 70% in all capitals except Canberra, which is a remarkable result given that we had higher numbers of listings coming through, and maybe still some anticipation about a higher interest rate, which of course didn't occur. But we still had remarkably clearance rates higher than 70% in every market except for Canberra. And of course, we have a pause now. It is the end of the early autumn selling season, which finishes, I guess, notionally at Easter, and we then move into the second part of the market. But it's been a very positive early autumn selling season, Lou, and we shouldn't be surprised with these higher clearance rates that we're seeing higher house prices or home prices coming through as well. So, no surprise, higher house prices are following higher clearance rates. You can see that trend in Sydney, which is clearly evident. We show this most weeks just to show why we do focus on those auction markets, Lou, because they are a very good forward indicator of general housing market activity. Higher house prices reflect higher clearance rates. Same thing in Melbourne, same relationship. Last weekend's results, big numbers in Sydney. 800 auctions, over 800 auctions, not that far away from last year, actually, but although it wasn't Super Saturday the same weekend last year, as Easter fell a week later. But a good result there in Sydney, 73% clearance rate. Melbourne, not quite as many auctions as we would have anticipated in Melbourne for Super Saturday. However, a very good result there, 74% clearance rate. Brisbane bounced back strongly. with a 76% clearance rate. And as usual, Adelaide floated around 80% clearance rate with higher auction numbers. So, really some very positive results there, Lou, to finish the auction season. And we await the bounce back in a couple of weeks. So when we look at the monthly auction results, Lou, we can see, that it has been a positive March in terms of clearance rates there in Sydney, similarly, and tracking at its highest level for nearly a year, similar in Melbourne. Brisbane's picked up over March compared to April and February. And Adelaide's still strong, and Canberra's been the underperformer, but at least some consistency there in the Canberra market. So you can get those auction results, of course, on my LinkedIn channel, Doc Andrew Wilson, every Saturday night for the capital city updates, and the full national report out Sunday morning. So take advantage of that. It is a clear indicator of what's happening in our housing market. So that's the end for today, Lou.
Perfect. I had a question. I had a client yesterday I sat with, and it's quite interesting. They're using Google as a source of information and statistics. Do you use Google?
No, not really. No, not really, Lou. I have my own independent data source, but
I'm sure it's probably a much better level than Google.
Yeah, well, I track the data that's released. I guess it does come through search engines in the first instance, but there are other obviously portals that have rich data sets that one can review and use in terms of modelling. Yeah, thanks very much, Lou. It's been great today, and we look forward. Of course, it's been a very interesting, I guess, 24 hours in the sense that we've had interest rates on hold. This is something we haven't seen for 10 months, so it's different. And it'll be interesting to see what the Reserve Bank, how they move forward. And, of course, as the data comes out, will they be, justified in saying, well, maybe it was a good time to pause? Or will it be proven to be, something they've done a little bit prematurely in terms of controlling inflation? One of the issues that I wanted to mention also was that, it's sort of these things happen, but we've actually got some concerns now over the price of oil. OPEC have announced they're going to cut production of oil, and this may mean higher fuel costs. And, of course, that's the worst thing you want in terms of trying to control inflation with oil prices already too high. But it's all about the change in from period to period. And our oil prices have fallen by around about half over the past year, which has been a significant contributor to falling inflation. But, if we reverse that and start seeing prices rise again, I'm afraid we're back to the slippery slope of higher inflation. And that's going to mean that, maybe the Reserve Bank missed an opportunity to continue to tighten monetary policy and, offset what's going to be higher inflation down the track.
Yeah. I suppose the prediction is possible increases moving forward.
Well, we'll wait and see, and we'll have all the news first here, of course, Lou.
That's it. We'll be waiting. Thanks,
mate.
Appreciate everything. It's fantastic. See you soon.
Chat next week.
Bye-bye.